Morning, friends. Warm welcome to everyone. On behalf of the Elite Printers Club, I welcome you to our webinar on navigating the confluence of governance, risk, and compliance. Governance, risk, and compliance isn't just a defensive strategy, it's the very cornerstone of sustainable growth, operational excellence, and trusted leadership. Truly privileged to have an authority who has navigated these waters at the highest levels, Dr. K. Srinivasa Rao, and we encourage your active participation in the session. So please have your questions ready for the question answer session that will follow his presentation.
I would just like to give the background of how the webinar is being planned now. The most important thing is it is a 90 minutes capsule. 5 minutes gap will be there. So it will be 95 minutes. Maximum it will go to 100 minutes. So stay tuned if you want to be with me and grill me after that to whatever extent you want so that I learn from that and I will try to equip myself with those nuances. First we will be talking about the corporate governance. So what is the role of GRC? Just very quickly, let us see how the GRC, particularly in the BFSI sector, I can say, because though it is pointed towards banking system, but it is also equally applicable to the insurance sector, to the BFSI sector. A larger, even enterprises also can take a cue from this. And if it is allowed to precipitate over a period of time, it transforms into a larger crisis. And we have seen many of them coming up in the financial sector. Comprehensive risk management, because why risk management has become important enabler for strengthening the governance because of the technology that comes into picture. Because without the data, there cannot be risk management. Is not a one-time activity that we will do that, okay, we will do this compliance. That's not the case. Regulatory compliance is something integrated to the culture of the organization. It should be imbibed as a discipline of the organization, that compliance is not a burden, and strengthen the GRC framework, then stakeholder confidence and market stability, we will be able to contribute. So that is why I would like to convince the audience that GRC has a critical role in the sustainability of the organizations. And how we do it, it differs from organization to organization, and hence the discipline also changes from organization to organization. What is the coverage that we are going to do in the world, operating world in which we have to navigate to make GRC much more effective? Corporate governance, I think there are a lot of corporate governance developments that are there in the literature. I don't want to, all of you are learned people, so I don't want to get into that. But what is more important is that flows through the Subcommittee of Financial Stability and Development Council. So this FSR is the intelligence input that comes from in the banking system, because public sector banks still, the stakeholder value is enhanced. How you enhance the stakeholder value? No, we have RBIA, that is risk-based internal audit. Look at that, because if that is taken care, then regulatory and supervisory system will automatically be taken care. But we don't look, if you don't look at yourself in many organizations, may not be in PSBs, the compensation is so quick. As a result of which, what happens is that the risk appetite is never followed, and there is a lot of tomorrow's risk being taken today for monetizing the thrill that you get. So those are all some of the things which need to be capped, and culture, ethics, and alignment of compensation, how it is being ensured, guarded from all sides, and the MIS which goes to the audit committee of the board must be sanitized to the highest possible data integrity standards. Because if the audit committee doesn't know something, to be brought to the board's attention. So subcommittee has a very big role. This is the arms and ammunitions of the board. If the board is not provided by the subcommittee the right kind of inputs, then it will be very difficult for the board to perceive data integrity standards and ethical standards all have to be followed. Now, they are almost like what we have discussed in the Companies Act, because the regulator, local regulator, and the Ministry of Corporate Affairs, everybody draws some kind of a clue from these kind of best practices. There is a there is a uh, so boards' role in risk governance, how they drive the risk governance, how they make people to know about the risk profile of the organization and risk nuances that one has to keep in mind. Then comes senior management responsibilities, roles and responsibilities, business processes, capturing of risk and fixing of risk appetite, risk tolerance levels, how compliances are being done. All these things have to be taken care. Then risk identification, monitoring and controlling, enhance public trust, and improve decision-making process and comply with global standards. We will be inching towards global standards if we implement all these 13 and integrate them with our policy framework, with our process framework, internal control, systemic controls, and things like that. So this is all about corporate governance. Rules, structures, and processes by which a bank is directed, controlled, and held accountable. So, governance and corporate governance should not be confused. Governance is integrating the prescription into the business processes of the organization, so that it's very, very clear what is corporate governance and what is governance. Governance is making corporate governance happen. Very simple. Integration with strategy and risk management. That's also very important for us to understand. Is the information, and what happened yesterday is the data. So data and information, unless it is integrated well, it becomes information and reporting system. So the flow of information right from the line management to the top management has to be very much aligned with the reporting MIS that is required by the organization to have a control on the monitoring of the corporate governance systems and the governance system. If you don't have that kind of an input, because unless we are capable of managing the mismatch, we won't make money. That is the problem, because we cannot align the tenor of the liabilities with the tenor of the assets that we are having. It's not possible. The money lies in framework. Now, EASE Framework 7, Bank of Baroda incidentally got good recognition in that. EASE 7, 1819 onwards, it has started. So crisis management and resilience, we are very good in this. Crisis management and resilience, we are very good. Indians are normally very good in BCP, business continuity plan management, crisis management and resilience. We should have this quality that banks are having 17% capital adequacy ratio, 2.6% NPAs, and a NIM of more than 3%, 3.5, 3.75. It can be done. It can be kept up. And maybe somewhere we may make one notch above. 2.6 may become 2.55, or a NIM, if you are having 3.75, it can become 3.78.